All right, Max Financial crowd, thank you for tuning in once again. We finally have got the computer fixed. Hold on, y'all gotta see this. This is a beautiful thing. Oh, look at that. Back up. The whole office is operational. It's dope. Okay, y'all. So I'm super excited. We're firing on all cylinders in that regard. So we're gonna go ahead and bust out the second part of the comprehensive reviews that I originally started this page for. If you've been following me since day one, you know this page was about breaking down some of the literature that I have been delving through. Let me see if I can pull this up. All right, here we go. All right, so this was the reason why I initially started the page, Stock Investing for Dummies. Read through this within a few months or so. But as far as helping me out understanding the market, that was the most beneficial tool, along with options trading for dummies and then charting for dummies, which we're going to kind of get into in this video as far as what charts have to do with making you a more profitable trader. However, without much more being said, I want everybody to know this is not financial advice. This is not a inclination for what you should be investing in. This is more or less me giving you a comprehensive review of this well-written book by Mladjenovic, Stock Investing for Dummies, picking out the meat of it for you and kind of providing you with the bits of education or the value that book is really trying to put out there. So without much more being said, we're going to hop right into it. Max Financial Comprehensive Review Part 2. This is only Part 2 of what is going to end up being, looks like a 3-part series. But now that the computer's back, we're going to start cranking out those videos. And let's just get into it, guys. It's a holiday weekend. 4th of July is tomorrow. So without much more being said, I'm going to hop into this, get in, get out, and maybe go have, a hot dog and a brew before it's all said and done. Who knows? It's Independence Weekend for America. So we will go over this briefly, but then we'll get you guys out of here in a timely manner. So grab some coffee, grab a notebook. You're going to want to take some notes on some of this stuff. This has really helped me become a profitable investor. But let's hop into it, shall we? Okay, so first things first, Stock Investing for Dummies Part 2. What are we talking about? We're talking about basically a piece of financial literature that's helped me take my financial career to the next level. As far as just educating myself on things that I need to know, price action, charting, both positive and negative movements in price action. Let's just get into it, okay? So we're going to go over understanding stock charts. We're going to go over and understand examining earnings, implementing some indicators so that you can look at those charts and kind of predict where the price action might move next, and then reading understanding stock tables, which is going to be provided to you through any investing app or brokerage. You're going to have to be able to read stock tables to be able to, make, astute financial presumptions. Not everybody's going to know exactly what to do, but with the information that the charts give, you can then use that to make a more accurate, more confident decision as far as where you want to put your money. So what are we going to hit first? Reading and understanding stock charts. All right, price action. So price action, this can refer to any up or down movement in a security's price. There's positive price action, there's negative price action, obviously. This is just buying and selling behavior, and they ebb and flow. So there's always going to be an up and down, generally pretty balanced movement between the up and down over the short and the long term. But price action is definitely something you're going to want to keep your eye on. This chart specifically is looking at Apple's price action back when Apple was down around, or up around $555. Apple is much more attainable now. So this must have been back in the day, but nonetheless, it's a clipping from FinViz, which is a great financial resource site if you're going to be looking at certain stocks, where they're going, how many of the stock shares are shorted, where the stock's going in the future. All these tools that we use as far as FinViz, be it, I use, stock charts, I use stock twits, I use, what is the other one? Yahoo Finance is a big one for me. But nonetheless, all of them are going to provide a general view of the stock and what the stock's doing over a allotted period of time. Barcoding, which is what I wanted to point out, was a term that investors put on a time range where the stock price doesn't necessarily go up tremendously or down tremendously, but it kind of evens out, and you kind of see for X amount of days, X amount of months, kind of a leveling off. So the stock price doesn't exceed what it has been over a average amount of days, nor does it go below a support level of where it has been over a certain amount of days. But typically barcoding can lead to a breakout. So you're going to want to keep your eyes on barcoding, be it coming off of a downtrend or coming off of an uptrend. Examining earnings. So an example of examining earnings are posted on each of these. You're looking for basically a return on investment, right? So whatever your company is spending, you want to be sure that your company A is able to offset that spending with some kind of financial gain, so you can see some kind of influx, and thus your price will raise. Or you want to see where they do have some assets that are starting to build up or outweigh their liabilities, which is where you can kind of really start to value a company. When examining an earnings report, the fundamentals are usually the primary indicator. This is that fundamental analysis that we talked about in the prior video. You're going to want to just look at the numbers, right? What's going in, what's coming out, what's owed, and what's outstanding. All these things are going to go into a stock's price, how big of a risk it is moving forward, if you should bet on it in an option, or if you should put a put on it, and if it's in the case of it where it's going to fall down. All these things, while not the only thing that a stock is relying on when going up or down, are a fundamental crux for the up or down movement in it. Next is understanding indicators. So what are indicators? Indicators are things that you can add to charts to help you thoroughly understand what the stock or the equity, or even the crypto, hell, this can even work with Forex, where it's going. And there's a bunch of different patterns, a bunch of different trends that you can pick up on, a bunch of different things to look out. The things that I pointed out specifically are what I've seen the most common in the market, specifically this cup and handle here first. The top left diagram actually perfectly points out what a cup and handle is, where you have a really rapid price raise and price action. Hello, Lenny. This is the house cat, Lenny. He will probably be in and out of a couple videos as long as I leave the door open. All right, so the cup and handle, rapid run up on price or rapid run down. It just depends on which way you're going. And then the price really peaks somewhere. And once it peaks and it notches that peak, it then starts to regress a little bit, but it doesn't regress past the prior support of where the initial had taken off. So you look at your charts, you see, okay, well, this stock on gold specifically had rocketed right around 700, shot all the way up to about 1,000 to 1,020, and then it shot back down to right around 700. But this only was reversed when it hit the bottom support where it initially took off from before, thus bringing it back up to the target of 1385 and where it reaches higher highs. So that's just one example of where a cup and handle can really come into handy as far as predicting where the price may go in the future. However, it's not the most reliable in some cases, but it does work out a majority of the time. Some other lead indicators that I use, the MACD, the RSI, and the Fibonacci retracements rather, are ever important, just because RSI, or the residual strength index, will tell you how overbought or oversold a stock or equity is. If it's in the upper echelon of the RSI, you're going to want to be careful about buying, because people are going to start to look to sell. While if it's in the lower end of the RSI, you might look to set up a position, because there is a influx of sellers, and that's pushing the price lower and lower each time. Now one of the things that I look at every day is volume, as far as how many shares of a specific equity are being sold or bought. If a stock is oversold or overbought, yes, you can see that in the RSI, but it also is reflected in the volume of what stocks are doing. Now, candlestick patterns and more ways to read price action. We went over the cup and handle. The bullish engulf is a candlestick pattern. If you can revert your eyes to the top right diagram, we got a bearish engulf there, where the sellers have outranked or outnumbered the buyers, thus forcing the price down in a manner where it's indicated on the price action and on the bar chart, where you can currently see that wick on the bullish engulfing is exceeding the prior wick and engulfing it. When it does engulf, like you do see here, the following moves are typically going to follow the trend. So it's going to be more sell-off pressure until it bottoms out and you see some consolidation. So that's what you're looking at there with the bullish engulf. With flags and pennants, these are all bar chart setups where you can use price action over an allotted period of time to form some kind of pattern, be it in pennant or a flag or triangle form, all of which indicate either a breakout or a breakdown, all of which can help you better understand which way your stock is going to go in the future. So finding these descending triangles, these flag or these pennant patterns aren't going to be your only indicator towards if a stock is going up or down, but it can be a major lead indicator if you're going to place a position and you're looking to try to enter before a huge breakout. Reading and understanding stock tables. So on every stock marketeer that I use, for right now it's just Webull and Robinhood, even though I'm in the process of closing out my Webull, you're gonna see a similar layout to what we have here, which is stock tables. It's gonna implement the name, the symbol, the percent change from the day before, the month before, or the period before. There's time periods that can be changed in and out of each app. The volume as far as how many people are buying and selling a specific equity, a 52-week high, the 52-week low, the yield, and the dividend, all things that are going to give you breadcrumbs, little bits and pieces of information towards what a stock is doing that day versus what it's doing over a 52-week range versus what it's doing from the night before. All that will be provided for you in most cases. However, in some of the investing apps, specifically Robinhood, you might not get as thorough or as in-depth of a stock table as you want. I actually prefer Webull for that, which is why I'm kind of in the process of moving some things around. But I do think understanding the stock table and understanding what it's trying to tell you is imperative as far as what is going on with the stock, what could be going on with the stock, and, should you hold it? Should you sell it? What should you do? These are all things you're going to need to know as an investor. That, in and of itself, was what I wanted to cover in that segment. However, I wanted to tell you guys I got a little bit more coming. We got a little bit more coming down the pipeline. I kind of recall going through this when I did this back in April. I can't believe it's been a whole 4 months since I've actually looked at this, but I thought it was important to get that out and to show you guys that. We're going to wrap this book on the next video. So with that, just be ready to finish off the notes and get ready to get into options trading and charts. I'm not really sure which one I want to do first. Maybe you guys can help me out. Likes, comments, general ideas about what you guys want to hear about the page. I would love some feedback. Again, thank you guys for tuning in. If you haven't already, please go like, comment, and subscribe. And also, please check out the links. If you haven't got invested, feel free to check out my Webull, my Robinhood, or my Coinbase link. They're all in the description below. Have a great day. Peace.